And our next guest is from Lemon Tree Hotels. Well, they saw good growth on a year-on-year basis, although there was a bit of a dip on a quarterly basis, but that's a seasonality factor that plays out. The company also saw an increase in costs due to renovations. But what's the way from here on? Well, we have Mr. Patanjali Keswani, the chairman and managing director of the company, who joins us on the show. Hi, Mr. Keswani. Thanks so much for speaking to us here on CNBC-TV18. Well, let's get a couple of basic numbers first out of the way. How do you see the average revenue per room shape up going ahead? I mean, what should be the broad range for the next couple of quarters? And also, how's occupancy so far in quarter two?
Morning, Nigel. I think things are shaping up as we anticipated, because last year was the first year after COVID, so we focused on the price hike. And obviously, as a result, we lost a certain amount of low-paying customers. And I think I had said to you earlier, about a year ago, that after the first year, when we really increase prices, we will then focus on a dual strategy, which is increasing the occupancy and prices. So that's roughly what's played out in Q1. Q1, incidentally, is seasonally the weakest quarter. And as you said, you should only compare year on year. What I'm finding is that now our occupancy has crossed 70% in Q1. In Q2, we hope it will do significantly better, and accompanied by a price hike. So broadly, the way I look at it is Q2 should be quarter on quarter similar to Q1 quarter on quarter, and the real price hikes one will see will be from H2, which is from October. Right. But we are on track. We intend to average out at an occupancy of about 74%. And take prices up by another 10-15%, depending on market conditions, in Q3, and perhaps another 5% in Q4. So really, overall, about 20% by Q4 on a running basis.
So what does that do to your annual revenue, Mr. Keswani? Because the last time you joined us, you said that 20% is what one can expect. Do you intend to do better than that? And what kind of margins should one see then in this year?
We'll not, our margins should be over 50%. See, if you look at our costs in Q1, typically when our revenue increases, if it is price-led increase, then obviously the flow-through is 90%. And if it is occupancy-led increase in revenue, which is utilization, then the flow-through is, maybe 30%. So the average you can take is 25%. So my revenue goes up by $1 million, then my EBITDA grows by 750,000 broadly. So when you look at Q1, you will find that revenue grew 32 crores, and therefore one can safely say that the variable cost was about 8 crores, and the remaining 10 was really a mix of we are opening the biggest hotel in India in the next 2 months. So there is some pre-operative expenses we wrote off in the P&L. There was a large amount in renovation, which will start appearing from now, the results, including, actually, you can see it in Keys marginally in Q1. And the balance was some fixed cost increase. So my broad view is that obviously we'll be north of 1,000 crores. Now the question is, where will we be? And will we be well over 50%, or will we be at around 50%? That's something that's quite market-led. But broadly, minimum over 1,000 crores of owned hotel revenue and over 50% of net EBITDA.
All right. Mr. Keswani, Mangalam, when just before we got to the show, we were discussing about Aurika Mumbai that's going to be opening, right? Could you tell us what is the potential revenues that you're looking at, registering in this year? That's FY24. It'll be open only for a few months. And then FY25, how do you see it shaping up?
See, it's difficult, Nigel, for me to give you, because it's a ramp-up stage, okay? And this hotel is opening actually just around Dussehra time and then flowing into Diwali. If I look at next year, I would say the hotel should do a revenue north of 300 crores and EBITDA north of 200 crores.
All right. 300 to 350 crore with 200 crore EBITDA. That's the number that you had told us. Just quickly before we let you go, you had said about 24 crores of management fees is what you got in the first quarter. You expect this quarterly run rate of management fees to continue, right? About 100, 150 crores every year?
No, to keep increasing. So this year, let's assume we will do over 100 crores of management. Next year,
Right, Mr. Keswani, we'll leave this conversation for another day. There is a bit of a scratchy line, but the short point is that your management contract revenue will increase to 100 crores this year and will increase further going forward as well. Wish you good luck for the remainder of this year. Take a short break, come back, getting more on the markets and individual stocks.